Most traders start trading for freedom, but then they end up stuck staring at the charts all day, second guessing every decision that they make. The truth is, it's never the strategy that's the problem, it's almost always the execution. This is exactly where automation comes in, because when you remove yourself from the execution, you remove the emotion, the hesitation, and the inconsistency. And this is something that I specialize in. I take trading ideas and I turn them into structured, automated systems. So in this video, I'm going to show you a very simple strategy that I just made up in my head, and then I'm going to show you how I turn it into a fully working EA in MT5. So the strategy is very simple and it only requires one indicator, which is the 50 EMA. We will use this as a directional filter. We only have one rule for the entry. So every day at 3:30 p.m. we check where the price is in relation to the 50 EMA. So if price is above the 50 EMA, then we buy, and if price is below the 50 EMA, then we sell. From there, we need to define our risk. So the stop loss is going to be placed using the most recent high or low based on a look back period of say 5 to 10 candles. The take profit is going to be set using a fixed R multiple of say 2, 3R. So every trade has a defined entry, a defined stop loss, and a defined target. There's no guesswork involved. And that is important because simple strategies like this are actually ideal for automation because everything is rule based. There's no, oh, I think this might happen. It's either going to meet the conditions that are set or it's not. And this is where most manual traders struggle because you might have, say, a simple strategy like this, but when it comes to you trading it manually, you hesitate, you miss entries, you close your trades early, or you override your own rules. And this is exactly what destroys consistency. With automation though, none of this happens. It follows the rules exactly as they are defined every single time, and that's the goal, to turn a strategy into something that can execute cleanly without you having to constantly be there and without you interfering with it. Before we go over the code, I'd just like to show you something quickly. So if you trade prop firms or even your own personal account, I've built a simple but very powerful tool called TradeLock. TradeLock is a protection EA designed to protect your account from emotion and poor decision making. We've all had those bad days, you lose one trade, then another, and suddenly you're trying to win it back by forcing more trades, and that's where accounts get damaged. With TradeLock, you simply set your maximum daily loss and your daily profit target, and if either level is hit, then trading is lost for the rest of the day. There can be no revenge trading, no tilt, no emotional damage. And it also includes session control. So for example, if your strategy performs best during the London session, but you keep finding yourself taking random trades during New York or Asia, then TradeLock solves that too. Just set your allowed trading hours, and outside of those times, trading is blocked. Now just to be clear, TradeLock does not place trades for you. It's not designed to trade. It's designed to protect your account and protect your discipline and protect your mental capital. Because the truth is, most strategies don't fail because of the system. They fail because of the person using it, and this tool removes that problem. So whether you trade prop firms or your own capital, TradeLock can be a game changer. Okay, so this is the source code. I've already written it in advance, and I'm now going to walk you through it. So right at the very top, we first include the trade library. This gives us access to all of the built-in trading functions. Then we create a C-trade object called trade. This is what we'll use to place trades, modify positions, and manage everything inside of the EA. Next, we define the general settings. So the risk percent controls how much of the account balance we risk per trade. The magic number is a unique ID for this EA, so it allows it to recognize and manage only its own trades, which is good for if you're using multiple EAs on the same account. And then we have one position per symbol, and if this is enabled, the EA will only allow one open trade on the symbol at a time. Next, we define the entry settings. So entry hour and entry minute together define the exact time that we check for a setup. In this case, it's 15:30, which is 3:30. Then we have the EMA period, which controls the EMA length, and we're using a 50-day EMA as our directional filter. Then we define the stop loss and take profit settings. So the look back bars controls how far back we look to find the most recent high or low. The R multiple defines the take profit based on risk, and buffer points adds a small buffer beyond the high or low to avoid tight stops. Next, we have the break-even settings. So use break-even allows us to turn this feature on or off. The break-even trigger R defines how far price needs to move in our favor before we move the stop loss. And then break-even offset allows us to move the stops slightly beyond break-even if needed. Then we define the trade settings. So slippage points obviously controls the maximum slippage allowed when placing orders. And that is it for the inputs. Now after the inputs, we declare a few global variables. The EMA handle will store the EMA indicator itself. Last processed bar time is used to detect when a new candle forms. And last trade day key is used to make sure the EA only takes one trade per day. And then in the onInit function, we start by setting the expert magic number. Then we set the maximum slippage in points. After that, we create the 50 EMA using the IMA. We pass in the current symbol, the current time frame, the EMA period, shift of 0, the EMA mode, and the close price. And this gives us an indicator handle that we can use later to read the EMA's value. Then we check if that handle is invalid. So if the EMA failed to load properly, we return init failed so that the EA stops straight away. And if everything did load correctly, then we return init succeeded. And that tells MetaTrader that the EA is now ready to run. Next, inside the onInit, we simply check that the EMA handle is valid. If it is, we release it. And this is just basically clean housekeeping, so we free up the indicator resource properly when the EA shuts down. Next, we have the isNewBar function. So this is used to detect when a fresh candle is opened. And first we get the open time of the current bar using iTime. Then we compare that time to the last processed bar time. And if the time is the same, it means we're still on the same candle, so we return false. And if the time is different, it means that a new bar is formed. So we update last processed bar time to the new time, and then we return true. And this allows us to stop the EA from checking entries on every tick. Next, we have the getDayKey function. This is used to turn a date and time into a simple day value. So first we declare an MQL datetime structure, and then we use time to struct to break the time down into separate parts like year, month, and day. And finally, we return a single number built from the year, month, and day. So for example, one calendar day becomes one unique key. And this is what we use later to make sure the EA only takes one trade per day. Next, we have the asOpenPosition function. And this is used to check whether the EA has an open trade already on this symbol. So first, we try to select a position on the current symbol. If no position exists, we return false straight away. If a position is found, we then get its magic number. And finally, we compare that magic number to this EA's magic number. If they match, we return true. And so basically this function makes sure that we only recognize positions that belongs to this EA and not just any trade on the chart, like if you entered manually or if it was another EA, for example, that took this trade. Next, we have the getEMAValue function, and this is used to read the current EMA value from the indicator handle that we created earlier. So first we declare a buffer array, and we set that array as series. This means index 0 will represent the most recent value, and after that we use copyBuffer to copy the EMA data into that array, and we use EMA handle to tell MetaTrader which indicator we want to read from. 0 means we're reading buffer 0, which is the EMA line itself. Then the 1 means we start from candle 1, not candle 0. So we're reading the last closed candle, not the current live candle. We only copy one value into the buffer, and then we check if fewer than one value was copied. If that happens, we return 0, which tells us the EMA value wasn't available. And if everything works properly, we return buffer for index 0, which is the EMA value from the last closed bar. Next, we have the getRecentHigh function. This is used to find the highest high over a chosen number of candles. First, we use iHighest to search for the highest high on the current symbol and time frame. Mode high tells MetaTrader that we want to search the candle's highs. And bars is how many candles back that we want to check. The final one means we start from candle 1, so again we ignore the current live candle. And the result is stored in shift. This tells us which candle contains the highest high. Then we check if shift is below 0. If it is, something went wrong, so we return 0. and if everything is fine, we return the high price from that candle using I high. So this function gives us the recent swing high used for the stop loss placement. Next we have the get recent low function. This works the same way but for the lowest low. So first we use I lowest to search for the lowest low across the chosen number of candles, and mode low tells MetaTrader to search the candle lows only. Again, we start from candle 1, so we ignore the current live candle. The candle index of the lowest low is stored in shift, and if shift is below 0, we return 0 because something went wrong. Otherwise, we return the low price from that candle using I low. And so this gives us the recent swing low for the stop loss placement. Next, we have the normalized lots function. This is used to make sure the calculated lot size matches the broker's trading rules. So first we get the broker's minimum lot size, maximum lot size, and the lot step for the symbol. This tells us the smallest position allowed, the largest one allowed, and the size increments the broker uses. Then we check if our lot size is below the minimum. If it is, we set it to the minimum. Then we check if it is above the maximum, and if it is, then we set it to the maximum. After that, we calculate how many step sizes fit into the lot amount, and we use math floor so the lot size is rounded down to a valid step. Then we rebuild the final lot size using the minimum value plus the number of valid steps, and then we calculate how many decimal places the lot step uses. Finally, we return the lot size normalized to the correct number of digits, and so this function makes sure that the final lot size is actually valid before it sends the order. Next, we have the lot size by risk percent function, and this is the function that calculates the position size based on the risk percentage. So first we check if stop loss points is less than or equal to 0. If it is, we return 0 straight away because we can't calculate risk without a valid stop loss distance. Then we get the account balance, and after that we calculate how much money we want to risk on the trade. We do that by multiplying the balance by the risk percentage divided by 100. So if the account is 10,000 and the risk is 1%, the risk amount would be 100. Then we check if that risk amount is less than or equal to 0. If it is, we return 0. Next, we get the symbols tick value, tick size, and point size. These are needed to work out how much each point of movement is worth for one full lot. Then we check that all three values are valid. If any of them are 0 or less, we return 0. And after that, we calculate the value per point for one lot. Then we multiply that by the stop loss distance in points, and this gives us the money value of the stop loss for one full lot. If that value is 0 or less, we return 0, and then we divide the risk amount by the stop loss value for one lot. That gives us the lot size needed to risk exactly the chosen percentage. And finally, we pass that lot size into normalized lots, so the final volume is valid for the broker. And so this function is what converts a stop loss distance into a proper position size based on your chosen risk. Next, we have the apply break-even function. Obviously, this is the function that manages break-even once a trade has moved far enough into profit. And first, we check if break-even is actually enabled. If use break-even is false, we return straight away and we do nothing. Then we get the symbol point size along with the current bid and ask price. We'll need these values when checking whether price has reached the break-even trigger. After that, we start looping through all open positions. We go from the last position down to the first one, and for each position, we first get its ticket. If the ticket is 0, then we skip it. Then we use that ticket to select the position. If the position cannot be selected, again we skip it. Next, we get the symbol for that position. If it's not the current symbol, then we skip it. Then we get the magic number. If the magic number does not match the EA's magic number, again we skip it. So at this point, we know we're only working with trades that belong to this EA on this symbol. After that, we read the position type, the open price, the current stop loss, and current take profit. Then we calculate the original risk by taking the absolute distance between the entry price and the stop loss. If that risk is 0 or less, we skip the trade. Next, we check whether the position is a buy. If it is a buy, we calculate the break-even trigger level by taking the entry price and adding the original risk multiplied by the break-even trigger value. So if break-even is set to 1R, price has to move one full risk unit into profit before break-even is triggered. Then we check if the current bid price is greater than or equal to that trigger level. If it is, we calculate the new stop loss. This is set to the open price plus any option or break-even offsetting points. So obviously if you choose a break-even offset of 10 points, then the stop loss will be moved 1 pip into profit or above your entry price. So yeah, we check if the current stop loss is still below that new level, and if it is, we modify the position and we move the stop loss to break even. Then we do the same thing for the sell trades. So for a sell, the trigger level is the entry price minus the original risk multiplied by the break even trigger. So price has to move down by the chosen R multiple before break even is activated. Then we check if the current ask price is less than or equal to that trigger level. If it is, we calculate the new stop loss at the entry price minus any optional offset. And obviously if it's set to 10 points, then it will put the stop loss 1 pip below the entry price. And obviously for a sell, that would still put you 1 pip in profit. And then we check if the current stop loss is still above that new level, or if no stop loss has been set yet. If that condition is true, we modify the position and we move the stop loss to break even. So overall, this function checks every open position. It makes sure that they belong to this EA, and then moves the stop loss to break even once the price has reached the chosen R level. Next, we have the check for entry function. So this is where the EA decides whether it should place a trade. And first we get the current server time using time current. Then we declare a MQL datetime structure. After that, we use time to struct to break the current time down into separate parts, like hour, minute, and days of the week, like we did before. Next, we create the today key by passing the current time into our getDateKey function. This gives us a unique value for the current trading day. Then we compare that to the last trade day key, and if they both match, it means the EA has already taken a trade today, so we return straight away. And after that, we check the day of the week. So if it's a Sunday or a Saturday, we return and we do nothing. Then we check the entry hour. So if the current hour is still before the entry hour, we return. Then we check the minute. If the hour matches but the minute is still before the entry minute, we return. So these time checks make sure that the EA only starts looking for trades from the specific time onward. Okay, so next we check if the 1 position per symbol is enabled and whether there is already an open position. If both of these are true, again we return, and so this stops the EA from stacking trades on the same symbol. After that, we get the EMA value by using the getEMAValue function, and if that value is 0 or less, we return because the EMA was not read properly. Then we get the close price of candle 1. So again, we're using the last fully closed candle, not the current live one. And after that, we get the symbol point size along with the current ask and bid price. And then we get the most recent high and the most recent low using the lookback functions that we created earlier. And if either value is 0 or less, we return. So at this stage, all of our required data is ready. And next we check the main entry condition. So if the close price is above the EMA, we go into the buy logic. First, we place the stop loss below the recent low minus the buffer in points, and then we calculate the risk distance by subtracting the stop loss from the ask price. And if that risk distance is 0 or less, we return. After that, we calculate the take profit, and this is set to the entry price plus the risk distance multiplied by the risk to reward multiple. So if the risk is 1 unit and the R multiple is 2, the target becomes 2R. Then we calculate the stop loss distance in points, and we round that value and pass it into the lot size by risk percent function along with the symbol and risk percentage. And that gives us the correct lot size based on the stop loss distance. If the lot size is 0 or less, we return. And then finally, we place the buy order using the calculated lot size along with the stop loss and take profit. If the order is placed successfully, we update the last trade day key so the EA knows that it has already traded for that day. And then we do the same process for the sell trades. So if the close price is below the EMA, we go into the sell logic. The stop loss is placed above the recent high plus the buffer. The risk distance is calculated from the stop loss down to the bid price. And then the take profit is set below the entry price using the same R multiple. After that, we calculate the stop loss distance in points and we pass it into the risk function, and then we get the correct lot size. If the lot size is valid, we place the sell order, And if the sale goes through successfully, we store the current day key, so no more trades are taken that day. So overall, this function checks the time, it checks whether we've already traded today, it reads the EMA, it finds the recent swing levels, calculates the stop loss and target, it works out the correct lot size, and then places either a buy or sell depending on where price closed relative to the EMA. And then finally, we have the onTick function. So this is the main function that runs every time the price updates. First, we check if there is a new bar. If a new bar is found, we call check for entry. And this means the EA only checks for new trade entries once per candle rather than on every single tick. That keeps the entry logic controlled and avoids repeated checks within the same bar. Then after that, we call apply break even. This runs on every tick, so if price has moved far enough into profit, the EA can move the stop loss to break even as soon as the condition is met. So this final function controls the whole flow of the EA. A new bar comes in, the EA checks whether a trade should be placed, and then on every tick it keeps managing any open position through the break even logic, and that's the full build. So as you can see, the code is actually very clean. We define the rules, we structure the logic properly, calculate the risk based on the stop loss distance, and then let the EA handle the execution automatically. And this is exactly the benefit of automation. Once the rules are built properly, the system just follows them exactly as defined, without hesitation, without emotion, and without any manual interference. Okay, so now that we've gone through all of that, let's now go back over to MetaTrader 5 and we'll run it in the strategy tester. If you're serious about automated trading, I've put together a few free resources on my website to help you. First, you can download my free professional trading journal, and this helps you track your win rate, your average R, your expectancy, and overall performance, so you can start treating trading like a real business. I've also included a free MQL5 EA starter pack, and this gives you the same framework that I use when building expert advisors, so you can build faster and avoid wasting time starting from scratch. And if you want to learn how to code your own trading robots, I also have a complete beginner-friendly MQL5 course where we build expert advisors step by step. And if you already have a strategy and you want it automated properly, I offer custom EA development services where I turn your trading rules into a clean, reliable MT5 expert advisor. Everything is available at www.mqlexpert.com. Let's get back to the video. Okay, so I've loaded the strategy tester. You can see the entry hour is at 3:30. The look back bars for the stop loss is going to be 10, and we're going to target 3R. The break even will be set to true, and we're going to the trigger will be 2R, sorry, and we are risking 1% even though it says 0.1. It's just something that happens with certain brokers. I won't go over it now, but I'll just click start. So now we just need to wait for the 3:30 candle. Okay, so that was a bit quick, it was a big candle. So at 15:30, which is correct, 3:30, the price was under the 50 EMA, so the EA sold. The stop loss, didn't really get to see it, but it was above here, which would have been the highest price over the last 10 candles, and the target was 3R, so that was correct. So let's now wait and see what happens the next day. Okay, so the 3:30 candle was under the 50 EMA again, so price sold. The stop loss at the highest price over the last 10 candles. We have the TP down here, set to 3R. So now we have a buy. We can see the the 3:30 candle was above the 50 EMA, so the EA entered a buy. The stop loss has already been moved to break even because we're above 2R in profit, and yeah, so we can see this is working correctly. The only thing that we could possibly add to the code, just to make it a little bit cleaner, is a rule to say that if there is already a trade on that day and it closes after 3:30, that it's not allowed to enter the trade anyway, because obviously this trade entered here at 6:15, and obviously that's 3 hours too late. Yeah, it's perfectly fine anyway. But yeah, we can see this is working nicely. If we go to settings, turn off visual mode. If we go to if we just test the last year using the graph, we can see that it is looking good. It's not just going up in a straight line, which you know that I hate. We're going up incrementally in steps, so you get to see the drawdown periods and then the recovery clearing the drawdown or the equity high. So yeah, that's very nice. I think I'm gonna have a go at optimizing this and see if I can make it better. I mean, if we just have a quick look from say 2020, the last 6 years, click start. So far it's not looking so bad. Now we're in a drawdown period here. Okay, so that graph's looking kind of poor. So it was pretty much almost 5 years just going down. And then from 2024 it worked. So by optimizing it, I think we could get this graph to look, or this entire graph to look more like this one. But I'll do that in a separate video because obviously this one is already long. But yeah, that is it. Thank you for watching.